Welcome. Today I'm excited to share my proven 5-step mechanical options entry system. It's a system that has been refined over 13 plus years, and the best part is anyone can learn it. After 20 years of options trading, I've simplified my entry system to just 5 mechanical steps. It's based on math, not gut feelings, chart reading, or complicated indicators. If you can follow a recipe, you could do this. I remember when options seemed incredibly complex, with terms like strangles, iron condors, and butterflies. It felt like needing a PhD in mathematics. But the truth is, every strategy is just a combination of puts and calls. Today, I'm breaking down my exact 5-step system that has consistently delivered 70% plus win rates for 2 decades. This is the same system I use daily and teach to my members. Step 1. Universe selection. The first crucial step is selecting from my database of about 200 stocks and ETFs, focusing on the most active 60 to 70. High liquidity and tight bid-ask spreads are essential. Avoid penny stocks or low-volume options where the math doesn't work. Stick to big names like Apple, Microsoft, SPY, and QQQ for reliable probabilities. This approach isn't about finding the next hot stock, but about trading where the math consistently works. Step 2. Volatility assessment. I look for elevated implied volatility using the options chain. No charts needed. High volatility means higher premiums, ideal for selling options. I aim to identify situations where the market is pricing in more movement than likely. Volatility is mean reverting, so I sell when it's elevated to capitalize on the expected decrease. Step 3. Probability calculation. This step involves probability calculation using one standard deviation. The options chain reflects the market's opinion on where a stock will be. One standard deviation provides approximately a 68% probability of the stock staying within that range. For instance, if Apple trades at $180 with a $10 standard deviation, there's a 68% chance it stays between $170 and $190 by expiration. Selling options outside that range gives me a 68% chance of winning, which increases to 70% plus with proper management. It's all based on math, not guesswork. Step 4. Strike selection. I choose strikes based on probabilities, typically around the 1 standard deviation level. The goal is to balance meaningful premium collection with a high probability of success. Choosing strikes too close to the money yields more premium but lower probability, while strikes too far away offer insufficient premium. This process is mechanical, guided by math, not intuition. Step 5. Position sizing. This step might be the most important. I trade with small size, but make many trades. Think of it like flipping coins. A few flips might give skewed results, but many flips will approach a 50-50 distribution. I never risk more than 1 to 2% of my account on a single trade, but might have 20 to 30 positions open simultaneously. This approach leverages probabilities to work in my favor over time. Proof and credibility. This system has provided me with 70% plus win rates for 20 years. This isn't because I'm smarter than anyone else. It's because I follow the process religiously. No special skills are needed. You don't need to be a math genius. You don't need to predict market direction. You just need to follow the system. This is the exact same approach I teach in my membership. My members see every trade I make in real time, with the reasoning behind each decision. While anyone can find trades, and many alert services exist, our system achieves mechanical profit targets in 75% of trades. The remaining 25%, where trades face challenges, require experience, and proper management. I share real-time trades with my gold level membership, and there's a link in the description. Remember, this is about building consistent, sustainable profits over time, not getting rich quick. What questions do you have about this system? Please drop them in the comments, and I'll answer everyone.